Welcome. So I am so thrilled to have Tamar Hermes on today. We met many years ago at a women's retreat in Santa Cruz, California, and we just met and it was like this. Like, Tamar is contagious, I have to say. She is a full-time investor, coach, author, and founder of the Wealth Building Concierge, supporting women to get wealthy by mastering wealth strategies and real estate investing. While growing successful businesses in the retail and entertainment industries, she built her portfolio in Los Angeles. And get this, she manages today more than an eight-figure portfolio, eight-figure, that is. Today, she manages, she also has various assets in private equity, real estate, crypto, collectibles, and cannabis. And she has done so many more things, including writing her first book called The Millionairess Mentality, a professional women's guide to growing wealth through real estate. And there's her beautiful book. And get this, it's a 3 times #1 Amazon bestseller. Wowza, that's so great.
Wowza.
Wowza. What I love about Tamar is she is a voice for women getting wealthier and happier and believes that every woman deserves to thrive and become wealthy, and an abundant woman serves as a role model for all other women. Today, we're going to be talking about building confidence, thinking creatively, communicating effectively about what your desires are, and finding those winning solutions, and also getting a return on capital. Welcome.
Yes.
I
Thank
am
you.
so
Thank you for having me. I'm so
happy
excited.
you're here.
I'm excited to dive in.
Let's dive in. So the first question I really want to know about is, like, why do women not invest as much as men do? What are your thoughts on that?
I've thought about this a lot, especially because as a young girl, not growing up with money, I remember looking around, and really, if you were looking for a role model in any way on the media or anywhere, it was all men. And we really couldn't even vote. We couldn't vote, we couldn't own property until fairly recently in time. And I just think the conditioning of the woman's place is in the home, and that whole idea of our place and what we're capable of has been culturally just injected into us, so that we don't feel empowered to make those kind of decisions. It's like, that's not for us, that's for someone else. Like, let's give it to the financial advisors, let's give it to the man, let's listen to other people before we listen to ourselves. So that, I think, has been a part of it. I always talk about this lemonade stand, a story that I had heard once, where the little boy goes out to start the lemonade stand, and the parents say, "Great, that's so great, Johnny, go, go, go." And the girl goes out, and the parents say, "Be careful, don't talk to strangers," because there's just a little bit more of a tenderness that, that we have culturally needed to have. So I think that plays into it quite a bit. And that's my story. I'm sticking to it.
I think that's a really good one. I mean, I grew up with a single mom who, had almost couldn't buy a house because, she was a single woman, at that time. So I think that's really an important piece. So let's talk about giving ourselves permission as women to want money, because that's really the next step. It's like, once you get through all of that societal piece that we've dealt with over the years, it's like, it's okay to want money. And you talk a lot about that.
Yeah, I do talk a lot about that, because I think that not only is it okay to have money, it's okay to have a lot of money. In fact, the more money we have, the more we can be on purpose, the more we can take care of our family and do all the things we want that we dream about. And then we're people in the world, we're serving the world. And so it is actually I feel like it's our birthright to just make as much as we can, as is and enough is available to us, and believing that. And it's so important, because really, when we're held hostage to money, when we don't believe that money can come to us, when we don't believe that, even when we have, I have many clients that have millions in the bank and still don't feel like they have money. And these days we're living so much longer, so it feels we definitely need more. And then we've got inflation, so we definitely need more. So there's this whole feeling of this pressure cooker on one hand, and on the other hand, we can think of the abundance and how much is possible for us when we're in the right frame to provide value into the world and to reap the rewards of financial rewards.
I think I have a really interesting example about that. A friend of mine, she's married, and she married someone who had a lot of money, who has a lot of money now. So they went back and looked at their, like, how much they had made over the years, and it was almost equal. But she was so terrified as a young woman with, single mom with 2 kids, that she kind of just squirreled it away in the bank, right? And her husband, her now husband, invested and invested, and he made millions. And she didn't, because she didn't invest and have her money work for her. So I think that's a really interesting point. So when you grew up, I mean, let's just go back a little ways about our money story. You grew up poor, as did I, but what were you taught growing up about money?
I was taught nothing.
Me
Really.
either.
We
Really.
didn't talk about it. It was just my father was a Holocaust survivor, mom was an immigrant from Israel, came to the country and just happy to be alive, just doing their thing, trying to get through the days, a bit of struggle going on. And, because we didn't have a lot, and they weren't actually, I wouldn't say particularly happy. It was more of getting stuck in that grind of, this is the life, and you have some good times, but yet there's a lot of struggle. No one ever said, hey, the amount of money you have, you could have more, and you're a little girl and you could create whatever you want to create. So really, not having that vocabulary and conversation really set me back quite a bit. And I make sure with my children, my youngest is 18 and he's going to be going to college next year. I really make sure to let them know, hey, you're abundant. You can make this work. My oldest is 30. She is a musician. She's chosen the artist life.
Yeah.
And she recently wanted to get a new car. She needed a new car, so we gave her a little bit of money to help her out. And I said, just find a used car. And she had such a feeling of like the amount that she had. She was able to get a used Lexus. We didn't give her that much. She got a great deal. And part of it was just she was in possibility, and she was looking for what she needed. And she was thinking, I want a car that makes me feel good, and I want a car that's solid. So just even on any level, we can really create quite a bit of abundance.
That's terrific. And my money story when I was young was rob Peter to pay Paul. My mom always used to say, you know, um, you must pay the rent. I can't pay the rent. I must pay the rent, and so that's the story I grew up with, which was kind of hard to get over the years. But once you understand your money story, you start to like be able to switch it around, which I think is really interesting, is to start out from that perspective, understanding what you grew up with in that story so that you can address it. And when did you start getting interested in investing?
Well, what had happened for me was that I did what a lot of people do, which is get a job, because I didn't know that I could be a business owner. I didn't know that I could invest. I had no clue. But I did know that I wanted to do something that I enjoyed. So I was working in entertainment. So it was not the worst job in the world by any stretch. And I started making a fair amount of money. And I thought, okay, I'm still trading time for money. And how can I get out of this construct? Because I want more freedom. And from there, I started investing in stocks, and I was impatient. So I would get out and get in and get out and lose money. And I started seeing that my landlord where I lived was getting rent from me. And I thought, this is interesting. Why don't I try to take the money that I have and do the same thing? And that was when the light bulb went off, that there was this thing called real estate that actually wasn't just meant for the wealthy. It was actually meant for anyone who wanted to partake.
That's fabulous. And you talk a lot about women and intuition, and that women actually make better investors because of their intuition. So let's touch on that, and then we'll go into some investing tips.
Absolutely. I do believe that women ultimately make better investors. And the reason is because we are communicators, first off. So we're able to listen to all the details and ask the questions and navigate through things that don't make sense to us pretty well, because we know how to communicate. The other thing is that we have a very keen sense of intuition. I think about it. I mean, we're the mamas, we're the nurturers. We are born for really having an innate ability to understand people and ideas. And once we actually can learn how to unlock the parts of us that feel like it's not for us, we really can start to gain momentum. What I found with I have one very large project that I'm working on with modular homes here in Austin with a business partner, and he could not be more flattered by my ability to come up with little nuanced ideas. We had one place recently where we were stuck with trying to find a crew to repair a lot of the buildings that we were working on. And I knew he had a good friend that had this resource. So I said, well, why don't you ask John? And it was so funny to me because he had said, oh yeah, why don't I ask John? But he hadn't thought about it. And now John's probably going to save us a lot of money. And it's so funny how you can just, the women just know, we see the nuance. So that's a great example of how valuable we all can be inside of this investing world.
I love that so much. I mean, intuition plays such a huge role in my life, and to know that it can also play a role in my investing makes me feel really good. So
Yes.
let's get into this. So what would you advise women to do to start investing? Like, what are your 5 top tips?
Okay, well, the first thing you have to do is decide that you want to invest, because the first barrier, the first thing that happens is, oh, I only have this much money, or I'm just scrambling through, or I have a lot, but it's all tied up, or I just don't feel confident. So there's all this dialogue that goes on. So the first thing you have to do is decide, you know what, I'm going to take a little bit of initiative on my own and trust myself and who I am as a woman, and know that I have the capability of creating more money on my money. So once the decision is made, then regardless of where you're at financially, you will find the way. It's just like the old saying, figure out the what, and then you'll find the how. So you figure out the what, and then you're going to find the how. It's going to happen, whether it's a partnership, whether it's someone offering you something that we have in real estate called seller financing, where the seller actually makes a deal with you and you give them you're doing the loan with them, and you don't have to put a lot of money down, if any money down. So there's all kinds of opportunities that can come forward to you once you figure that out. So that's the first thing. You also need to decide where you want to focus your attention, right? Because if I'm thinking, well, I want to be an expert in stocks, I want to be an expert in crypto, I want to be an expert in real estate, in every genre, it just gets a little bit overwhelming. So it's great to just decide, okay, this real estate thing is interesting to me. I'm going to get Tamar's book, and I'm going to read it and figure out all these options that I can do, and figure out something that works for me. There's also a lot of very successful businesswomen, and in this group, that don't have a lot of time. And part of what I did at a certain point was I started investing passively. So that gave an opportunity for me to get into deals where there were people that were experts where I wasn't, and was able to make money on my money, which is a great way to go. Because if I decide I want to be an expert in storage units tomorrow, I'm going to be on a steep learning curve.
Yeah, absolutely.
This is a way to get in. And while, yes, I don't make as much as the person doing all the work, I'm not doing all the work. I can still run my business and also build this income stream. So that's great. Then I would say connect with others, right? It's connections, and whether or not you want to do it on your own and you need someone to help you find properties, or whether or not you want to learn how to do the stocks or cryptocurrency or whatever it is that you're interested in, get connected. And then the thing that I love the most about real estate, but you can really do it with any investment venture, which is figure out how you can mitigate the risks. And when I say that, let's look at stocks, for example. So I bought Tesla about 5 years ago. I was a little late to the game, but I also 10x to my return. Why did I buy Tesla? Because my husband and I both had them. We loved the car. We believed in the product. So for us, it wasn't a huge risk. I didn't even have to put that much in. To make a 10x return is a significant return. And so there's a great example of something that you might invest in a stock. Now, let's say you wanted to mitigate risk in the stock market again. What about a Vanguard ETF, where you have a package of tech funds? So you're not investing in one. So like, let's say right now we're experiencing Tesla's down. Well, then you have Tesla, you have Microsoft, you have Amazon, you have a bunch of others. So then you're mitigating your risk. Then with real estate, we do the same thing. We look at the numbers, we look at the deal, and those are really great. Those are the things you need to do to, one, start utilizing who I am as a woman, what I'm capable of understanding, mitigating risks. Okay, this feels risky to me, I'm not going to do it. And starting to tap into that intuition and the logic that we have in order to move ourselves forward. It's funny, I wrote here, I love this. I love my last one, and I think so will you. I said, breathe. And
yeah, I'm not breathing as I'm listening to you. I'm like, oh, I've got so much to do. This is so exciting. I'm like, okay, I think that's a good reminder.
There's a couple kinds of breath. And the truth is, when we breathe, we're most of the time we're not breathing fully. So there's a breath where you inhale for 6, and then you exhale for 6 through your mouth. And you should be able to feel that all throughout your body, just really kind of moving energy through and breathing oxygen in, calming your nervous system. There's also the more aggressive type of breath work where we do it through our mouth and get more oxygen to our brain. That is a practice that is really useful, and movement of the body, all of those things, because like you said, Jenny, I'm sharing all these things and you're thinking, I don't know what to do. And all of a sudden it's just, you feel tight. And so you need to loosen yourself up. Also, what also happens is the first 4 that I shared, a lot of those were things that were the part of our brain where we're the do brain, go, 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 go. And where we want to tap into is we want to tap into the limbic, right? So that we're releasing, so that we're calm, so that our intuition and our heart center can come up and we can say, I can do this. I can do this. And then my 6th one, I'm just going to throw in a 6th one for you along that side, is to love yourself. And that comes back to everything that we were talking about: believing you're worthy, believing you can do, that you have value, believing that you're here for a reason, believing that money is part of our universe and that we can have part of it. So loving yourself is it seems obvious. And it feels like we should all do it.
Yeah. But being worthy and feeling like you deserve this is sometimes hard for a lot of people.
Absolutely. And even on your journey, maybe some of us that are listening might be up here in terms of, yeah, I have enough money, I don't really need to pump the gas that much, but I know there's so much more, I'm interested, or I want to have more so I can maybe have more of a cushion or leave more to my kids, or whatever the reason is, or charity and philanthropy. So whatever that is, the core comes from inside, knowing that we're all divine, we're all here with a reason to be here, and we all are valued for being here. And I say that because, I mean, it seems so obvious, like, here's this woman talking about wealth and she's telling us all to love ourselves. And I just think it's at the core of everything, because it's like, you know, it's so easy to slip out of it. You make a mistake on a business deal, or a few clients go away and you think it's me, or I didn't run the team, or I said something that made them feel that way. And a lot of times it's not that at all. It just has to do with timing, or with the way the world is, or learning lessons somehow. And so we have to go back to that place where we believe in ourselves.
Yeah, I think that's really important. And the other thing is to know that there's abundance in the universe and it's all around us. So a couple of other things that I wanted to talk about before we get specifically into real estate is, what are the other easy ways for you to start making money on money? Now, you've touched on some of these, but I think that it's really important. Like, how do we start growing our money more and more?
Mhm. I love this. And the first thing I'm going to say is that you can absolutely grow your money on money. And the word easy is not totally in it if you want to do it quickly. Easy and time go together in investing. So if I invested in Apple 25 years ago, I'm doing very well.
Yes, you are. Right.
If I invested in a property 25 years ago, I'm doing very well. Those were easy. I put 20,000 into Apple and now it's worth $500,000.
Mhm.
Pretty easy to grow wealth easily, right? While I'm going about my life. All I had to do was set it and forget it. So those are the easiest ways, is to believe in the process, to believe in the amount of time that it takes, and to know that it's working for you. Now, if you're in a rush and you want to go quicker, you got to be more aggressive. And generally, you're going to take a little bit more risk. And I say a little bit because I already talked about how we can mitigate risk. So you need to make sure that if you're investing in something, that you're mitigating risk. So right now, I am a proponent of Bitcoin. I like Bitcoin. I'm not telling you to invest in it. I don't have a crystal ball, but it seems to me like it's moving forward pretty well. So I'm willing to invest some of my money in Bitcoin, knowing that Bitcoin's going to go up, it's going to go down, it's going to go up, it's going to go down.
You've
And all
certainly
I need
seen
to do
that.
is set it and forget it, right? If I believe in it, I set it and forget it, right? But if I'm going to get hesitant on the way that I've mitigated the strategy, which is that, hey, the world is buying Bitcoin. Now we have Bitcoin ETFs. Now we have 3 trillion. It's been the best performing asset for the last 10 years. If I look at all those things, I may feel comfortable with my criteria that that's a good place to put a little bit of money. But you need to decide what risk you can mitigate. So that's a faster way. Like, another fast way is to buy a business. It's going to be a bit of work, but if you buy a business from a baby boomer that you know is wanting to retire, you can look at the numbers. You could buy a franchise. There's things that we can do where you can make a bigger return. Granted, I always say that wherever we're buying business, it's always about, okay, is there an operator in place? And generally they'll say there is, but then, you know, if the operator leaves, then until there's a new operator, you might be the operator. So as long as you're ready for that, that's
Yeah.
part of it, right? If we want
Ask
money,
a
if we
lot of
want money
questions.
quickly, that's what it is. But if you want to start investing, then you put your money in something you believe in, you mitigate the risks, and then you have to understand that that you have to play that game, you have to play the time. That's the best way.
Yep. I've invested quite a bit in just real estate apartment buildings through a couple of funds. And that's been a really good way to just invest the money and then wait. And it's not accessible. I know it's working for me. And then that's been a beautiful little opportunity that came my way. And sometimes I think that, you know, and I also want to note here that I've also invested things and lost, you know, tens of thousands of dollars at the same time. So, you know, it's the risk reward question. And I tend to be a risk taker, but any investor is going to have wins and losses. So
Yes, and it tends to come back to you have to understand that if you're going to want a bigger vision of your life, if you're going to want more wealth, if you're going to want to run a business, if you're going to want to own real estate, you're going to have to put yourself in situations where you don't 100% know the answers, right?
Yeah,
Because if it
exactly.
was a guarantee, everyone would do it. So part of the ability to be successful has to do with your ability to be able to get uncomfortable to a certain degree. And that's why I say mitigate your risk. Like, where are you comfortable? That's really
Yeah.
important.
And then diversify, that's a whole
And
nother
diversification.
topic.
That's
Yeah.
one of the WC wealth codes. My wealth building concierge wealth codes are clarity on you and your financial goals, optimize real estate ventures, dynamic asset diversification, and empowered wealth mastery.
There you go. I love that. And we'll talk more about tomorrow's class in a few minutes. So let's just switch over to real estate, because this is something that I've been interested in for a long time, and wondering when you first started, as you started to build your amazing portfolio in real estate. But what was your first experience?
So when I started 25 years ago, it was the situation that I shared earlier where I was working in entertainment.
Yeah.
It was 25 years ago. I was making about 150K a year. It's pretty good money. Actually very good money. And I realized I was trading time for money, and I just bought when after I bought my first property and could see how it worked. And you know, it really is all about ripping the band-aid, right? We have a, you know, we don't want to rip that band-aid off because it's going to hurt, you know, and we don't know, you know, we don't know what's under there, what the blister looks like. But you know, after you rip it, you're like, okay, it wasn't that bad, you know. It was, you know, I'm still here, I got this. And then we can go to, you know, and then we can start putting big band-aids on. So that's
Yeah.
kind of how it worked.
And then talk to us about strategies in real estate.
Okay. So wow, that is a big
Big
topic.
question, right?
Big topic, big
And we
question.
have about 15 minutes to talk about it tomorrow.
Awesome. Okay, so we already talked about a simple strategy, which is a long hold strategy where we buy a property, we let it, we get a tenant in it, we set it, and we just let it grow. Now, these days, what we're doing a lot is we can buy a property and we can do a short-term rental, a furnished rental, or we can also do a medium to rental that's furnished, where you can make more money, although it's a little more
Work?
tense in terms of the way that it goes, right? Because you have this short-term rental, and some days you might not have anybody in it. So you have to learn how to breathe through that and trust. Okay, this is a great property, it just doesn't have anybody in it for 1 week, 2 weeks, 3 weeks, and then all of a sudden you get somebody. So
Yeah,
that
well, and to the short-term rental, a lot of cities are now like really looking at the laws around these short-term rentals, like Palm Springs, for instance. Like right now, their real estate is tanking um, because the city is limiting Airbnbs, for instance. So, I mean, that's
yeah.
also, I mean, it was thriving for a long time, and now it might be changing a little bit.
That can happen. And when, you know, when it changes, the nice thing about real estate is that it rarely goes to zero. There are some cases right now with people that are invested in the multifamily space where they took very short duration loans and then interest rate went up, and it really threw off their equations of what kind of finances they could make. And some people really ended up upside down and they're having to actually give them back to the bank. But in general, if you're just buying one short-term rental or something like that, you might, you know, you can generally sell a house. So, you know, again, that's a great example because you look at your risk tolerance. So, you know, here on the larger scale where you're doing multi-million-dollar deals and you have business partners, and like Joni's invested in those. I actually run an investment group now where we have a lot of different types of deals like that we've vetted to work through. And this is something where you have to decide where you feel the most comfortable. And also, you also have to decide how much time you have, right? Because let's say you take a place in Palm Springs, and I've had clients do this. I had a client that bought a place in San Diego because somebody told her that it was a great place to have a short-term rental, and she has a couple companies and did not have time to deal with it at all. And so ultimately it did okay, but it was kind of a hassle. And finally, I just, when we looked at the numbers and what it was costing her in terms of time and effort, I realized, you know what? To me, it looks like if you sell this one, you can get out and you can move on with your life. So, that's just example. So
Yeah.
there's also strategies where we do lending. There's also strategies where we buy them in smaller partnerships. So there's all kinds of ways that you can buy real estate. And that was why I prefaced it with your comfort level, what feels good to you, how much, if you're really young and you just, you want to build a portfolio, you've got time and you've got some resource, by all means, you do an active portfolio and have, control that and grow that over time. But if you're at a place where you don't really want to deal with it, then passive may be the way to go.
So tell me, so if, say, a young person is starting out and say they're in the tech industry and they have, a little bit of money to play with and they buy their first house, how can you maximize that property in order to buy the next property? How have you done that over the years?
Okay, so that most of the time when people can maximize a property to buy another property, they're generally able to do it from what is called appreciation, which means that it's not the cash that you get every month. It is the value of how much that property has gone up. And Joni and I have both seen that because we're spring chickens. We're young, but we're not as young as maybe some people on the call. So again, case in point, you have evidence that this works.
Yeah.
So essentially what'll happen is maybe you buy a property ideally for lower than market value, because then you already have what we call built-in appreciation on
Which is
purchase.
great. Yeah.
And then you can go ahead and once that property, after you own it for a year or two, it might have some equity in the property. And at that point, you can do what is known as the refinance, where you take some of the capital out and buy another property. Or you can do a 1031 exchange, where you have to identify another property for equal or higher value in 45 days. There are some regulations on it. And from there, you can mitigate any kind of tax consequence. So those are two great ways. The other way is if you buy it low enough and you're making a lot of cash flow, it doesn't cost you a lot to run the project, then you can save up the cash flow and put down on another property.
Yeah, that's a great idea. And I think it's so important for people to know that there are some tax loopholes or taxes that you can utilize, opportunities like the 1031 exchange, right? That where you don't. Can you explain to people the 1031 exchange? Because not a lot of people know about that, and we just utilize that for a property exchange.
Right, that's right. I remember that. So essentially what you're doing is what you're doing when you do a 1031 exchange is you're basically telling the IRS, hey, hold up, I'm not going to pay you on these profits because I'm actually just taking this and rolling it over into another vehicle. Once all my business is done, then I'll pay you, because the tax manna cometh. So essentially what happens is you take maybe a $500,000 purchase that went up to $1 million, let's say, and then you have to buy a property for $1 million or more, or you can actually combine properties. And the tricky part is that you need to identify property in a certain amount of time, which I know you were dealing with, Joni, which was so much fun. And from there you can find another property, and you do the documentation with a 1031 person, and then the government knows what you're doing, and that's the opportunity. That I just thought of another great opportunity though too. If I was a young tech startup person, this is what I would do. I would find a property with maybe 3 bedrooms, and I would get roommates. And 1 or 2 roommates, which offsets, it's kind of been coined as house hacking, but I mean, I did it and it wasn't, I didn't have a name for it. I just did it. And so, you're offsetting your rent. And then what I would do is I would live in the place. If you live in the place the last 2 of 5 years, you can actually get an opportunity to get a $250K tax deduction or 500K if you're married, which is a great way to keep going, right? Because then all you have to do is like sell that property, take the profit, and go to the next. And if it's your first property, you also qualify for an FHA loan, which is 3.5% down.
Those are fantastic tips that a lot of people can use. In fact, one person who's not on this call today will definitely be using that, I'm sure.
Yay,
Um,
awesome.
what else do you want women to know about how their money can work for them?
What I want women to know is it is important to actually get started and to take action and to get into it. It's just like ripping off the Band-Aid. At first, we might put something off that we don't know how to do because we're afraid. We don't want to lose money. We don't want to create a mess of our financial lives. And yet, anything that we don't know, starting a business, getting married, there's a million things, and every single thing that we've never experienced that we do for the first time, there's always going to be that feeling that things may not go exactly the way I want them to. And then what we have to overcome that feeling with is reminding ourselves, no, it's going to go the way that I want it to, and that positive mindset, and actually taking actions moving forward. And sometimes it's a little dance. Sometimes it takes a little time,
Yeah.
and to, be with that and wait for the right deal, wait for the right opportunity, wait until it actually feels right. There was a number of deals that I've passed on before that were probably pretty good deals. And I just wasn't ready, or I didn't know, or it was a big deal, or some of them, thank God I didn't do it because they ended up not being good deals. So, you're going to get better at it the more you exercise it. So the main thing to think about is, what can I do today to get started and to feel more comfortable? You don't want to just go in willy-nilly, although you can certainly take a certain amount of money and invest it. There's also a lot you can do with retirement plans. There's a number of options that you have at your disposal. And generally, with real estate, you can make more money than you can in the stock market. Granted, with Tesla stock, I made a lot. I also took a lot higher of a risk because I just had one stock.
Exactly.
So as Tesla didn't do well, I could have lost it all. That didn't happen. And generally, if you believe in a stock, I mean, even Nvidia, people told me, they kept saying go in, it was like 200, and then they go in, it was 400, and then it was 800. And I finally just put money in, and I thought, God, am I crazy going in this lane? And I was like, no, like I believe in it. Now that's not a tax tip, because I mean the stock tip, because I could be wrong, but I'm just saying I was willing to trust it for the long term. The next day it went down. Was I worried? No, because I wasn't in Nvidia for 2 days. I'm in it for like 10, 20 years. Just put it in and set it and forget it.
Yeah, and you can start at any time. Like if you have $500, I mean, just start. And I mean, and just put it in there and then check it in 10 years. I mean, that's one thing that I wish I had learned, like that tip of just hurry up and wait and wait. And I've switched out money and stocks and all of these things over the years. I wish I would have just left it there and just seen what happened.
Yeah,
So,
absolutely. And then there's a lot of stock advisors, financial advisors, where they specialize in stocks, and part of the way they make money, and I'm not saying like, some of them are great, some of them are right, but for the most part, we've seen studies and statistics that show that if you just leave it alone, you will do as well, if not better, and you're taking so much more risk. I had this one guy recently, and just throughout my life, I'll get in relationships, and he ended up putting money in, and he was like, oh, I've got this great strategy. I go in and I go, and I thought, okay. And then I just like thought, this is crazy, and none of this stuff is making money. So I just stopped. But, part of it's a process.
yeah, it is a process. And again, sometimes you win, sometimes you don't. I mean,
But you win more than you don't.
Yes, absolutely, hands down. So I want to talk about like just a few questions as we end today about what would you tell your younger self today?
So for me, I would tell my younger self to believe in myself.
Yeah.
That was the
Absolutely.
hardest thing for me. That was the hardest thing for me. And sometimes it's still hard, you know, when I'm challenged or something goes wrong in my life, or I feel like things aren't working exactly the way I want them to. I have to continually remind myself that. And so I think that if I had more of a backing of that as a child, I would have been more confident. I would have been bolder sooner. I would have been able to shine a lot brighter a lot sooner. And I think as soon as we can ignite our candle and let ourselves burn, we're really making the world a more beautiful place. So it's really a disservice for anyone to not shine.
Yes, I so agree with that. What is the best piece of advice you ever received?
Hmm. Ooh, that's a big one.
It is a big
I've
one.
gotten a lot of good advice. I'm trying to think of something where I received it and it made a change immediately into my life. And I would say one of the things that I see a lot, and a lot of you on the call might already have experienced this, is that you get the same messages over and over. The themes aren't that different. It's just the way we slice it and dice it is a little different.
Absolutely. Mhm.
And so for me, you know, the best piece of advice probably was still around believing in myself, although it came in a context where I was really present and where I was connected and where I was listening and where I was quiet and where I let it in. So it had to do with who
So
I was
true.
being at the time I received the information, and then not forgetting it, not
And
going
putting
on
it
to the,
into action, right?
yeah, and letting it into my being.
I
So
love
that's
that.
the best piece of advice is always it really has more to do with who I'm being as I receive it.
I love that. So talk to us about your morning ritual that gets you started every day.
Okay, well, this is everyone's gonna love this. So I wake up and I usually do a bit of breath work. One that I've been doing recently is one where I shake my body, where I stand. So normally breath work is done where you're sitting, or meditation is sitting. And I just felt like I wanted my body to move because we release a lot through our body. So I'll do
Mhm.
a breath work where I'm breathing, and I follow a one on an app, and I just follow it, and I do that for about 6 minutes. Then I feed the dog, I walk the dog. Of course, we have our priorities
Good.
straight. And then I do a cold plunge in 41 degrees for 3 minutes and 33 seconds every day. For a while,
Is that at your house or
it's at my house.
it's out to
Yes.
your house?
Joni,
Awesome.
you're coming over. We're gonna cold, for sure. It's great. And for a while, my husband does it every day, and I was doing it every day. And then for some reason, I decided, you know what, I'm going to do it every other day. And I just didn't feel as strong because for me, the cold plunge, not only does it reduce inflammation, and I had a little lower back pain for a while, I have none now. It also calms the nervous system. So it does a lot of beneficial medical things. Then what happened was that I also realized there was a mindset piece. And the mindset piece had to do with I do hard things. I do hard things. And if you want to win big, you got to do hard things. I mean, it's just not that easy to do everything. I mean, I'd like to, be in the mindset like everything's easy. It's just, let's just say, if you don't want to say easy or hard, because it kind of has a attached to it, let's just say I show up big, right, in my life.
Yes, you
And one
do.
of the ways
Yeah.
I do that is by being able to succumb to a cold bath every morning, and and know that I can do it.
I
So
love
that's
that.
that's the second thing. And then pretty much those are my main things right now. Every once in a while I'll journal. I don't really I'll do some meditation, but I've kind of turned it into some breath work now. So,
That's terrific.
and then in
Thank
the
you. I
middle of
just
the day,
think it's really important. It's like, we all have pieces of advice that we've received. And it's like, what would you tell your younger self? Because so much of life is what we hear and experience from others. And then this morning ritual piece is something really important to me. So I'm always curious about what other people do. So let's get to the chat. So it says, let's just want to make sure we've got everybody here. So Kristen asked, I joined late, so I'm sorry if you've already discussed this, but I've heard of several apps for buying and selling stock. Are there any you recommend for someone new to the game, or do you advise to use a financial advisor?
Okay, I mean, that's a good question. I don't know about an app for to buy a stock. You'll get all kinds of opinions. What I would do is I would study companies that you like. For example, when I use the example of Tesla, I really like Tesla because I think it's a great product and I believe in it, and I think long term it's going to do well as a company. Uh, and there might be something that there might be a product you use, like maybe it's a makeup line, maybe it's something that you really like, and that might be a good way. You certainly can go to a stock advisor if you want. They charge fees and you're just putting the money in anyway. So you're basically paying them every year to manage something that you want to set and forget. So I just think you can go to a Charles Schwab or a Vanguard. The other thing I would say is if you really don't know anything about it and you don't have $10,000 that you want to see go down to $5,000, you may want to do a Vanguard ETF. I love those. I love Vanguard. I mean, Schwab has them. Everybody, a lot of people have the ETFs. The ETFs are packages of great stocks that some financial person is analyzing, but you don't have to pay a fee on them. And then you can go ahead and you can just invest in that, and they tend to do pretty well. I mean, I have ones in technology and healthcare, things that are pretty stable. I mean, we're not, healthcare is not going anywhere, even though we need a revamp, which is a whole other topic. But in the interim, we need healthcare, we need tech. So
That's great. So Eileen was wondering, it says, housing seems high with high interest rates, coupled with higher property taxes and property insurance seems hard to get in. Have one property and the taxes, insurance, and maintenance have gone up a lot. What would you say to that?
you're right. They
Yeah.
have. I mean, and and it has not gotten easier to buy a house for sure. There's a couple of suggestions that I have. One is, I don't know how much time you have, Eileen. You can certainly get what I call scrappy. And when I say be scrappy, look for wholesalers, look for opportunities that are off market, look at the MLS for deals where someone is distressed and needs to get out, where you can get a better deal. Because if you get a deal going in, then you have more room.
Yeah.
And they do come up, but there's a lot of people buying them. And also, yes, taxes and property. I mean, those are just part of life. I mean, I would say though that, if I looked at my house, I live in Austin, my property taxes are fairly high. And insurance is high. And overall, I would say that my house has appreciated very well. And also, I was fortunate to lock in the interest rates. The interest rates are they're a bit of an issue because they do make it higher to get in. And I would just say, don't let it stop you. Find some wholesalers, go to some meetups and meet them. Just be careful because some of them are fast talkers. Do the numbers. And then I would also say, if you get a house and it's higher price, maybe you take a roommate for a while. Maybe you'd want to live alone, but if you have a roommate, they can pay $1,500 a month, which will offset your expenses. So there are always ways to figure it out. It just
Like we started out by saying it's like you can be creative. It's like, how can you be creative? There's always ways. So
yeah. I mean,
let's
I
go
would
to, oh, go
I would
ahead.
absolutely be creative.
Yeah. Dora was wondering, it said, would you recommend investing in a real estate course to learn more about real estate?
There's a number of things that you can do. You can just, if you don't have a lot of resource, you can read my book. You can go on Bigger
Great book.
Pockets. Thank you. Bigger Pockets is great. It's a free resource and community. And that's a great place to start. And they have inexpensive courses as well. So that's another way to go.
And why don't you tell us about your course coming up?
Yes. So I am right now, I'm having a retreat that is from June 4th to 6th. And we do discuss wealth strategies and real estate investment opportunities, ways to analyze deals. And we're looking, generally that group tends to be a little more mature in terms of, their experience. And I also have a group that I'm going to be starting that is a passive investment group. And I do have a passive investment, a club that you can be in that gets a lot of really, really great opportunities that are mitigated. And so those are the two top ways to work with me right now.
And then we will send out Tamar's website and information, and you can also, check her out on Instagram. And she's got a newsletter. Do you want to talk about the newsletter a little bit? Because it's got
Yeah,
so many
sure.
great resources.
If you get on my list, you can just go to www.wealthwithtamar.com and you can sign up for the newsletter. You can invite friends to come to the newsletter, and that is once a week, where it's actually, I'm partnered with AI to come up with the best articles on women and wealth and mindset and real estate strategies and wealth strategies. And yes, hang on, let me type it in. And then there's that, and then there's also Tamar book, which will get you to my book. And there's a resource with the top 20 things that I wish I would have known before I started investing in real
Oh,
estate.
that's great.
And
That's great.
there's also, oh yeah, and thanks, Ruth. Ruth put in my website, and those are great
That's
places.
fabulous. I would highly recommend Tamara as a resource, and then do your own research, and there's a lot of opportunities out there. But Tamara, I'm so grateful for you and for you joining us today. This will be on our YouTube channel, and people can check it out, and you can send this to folks on your end as well. But thank you so much. This has been such a valuable resource, and I look forward to seeing you in Austin soon.
Awesome. Thanks for having
All
me.
right. Thanks, everyone. Take care.
Bye-bye.
Have a great day.